Hello. We will speak today about how to sell the car of the company to you as an associate or administrator, and what are the fiscal implications for this, because of course they are. And if you may wonder yourself if it's possible, I can tell you, yes, it's possible to sell it to yourself as individual. And let's see what are the procedures, the steps, and what you should do. As I've told you right now, yes, it's possible to sell the company's car to you as associate or administrator. And let's see what are the steps to do this, because there are some steps that you need to follow. First of all, you need to have the approval of the general meeting of the associates. AGA, like this, because it's really important to know that all the associates are okay with the selling of the car to yourself. They are okay with the price that you established, and they do not force you to sell it, in higher price, or they say you cannot sell it to yourself or take it from the company. So it's really important to have this paper in order that the selling of the car, it will flow okay and constant. The second step would be to have the correct evaluation of the asset. There are a lot of cases in practice in which the selling is done to a symbolic price, and sometimes, because all of this may cause some trouble, fiscal authorities here in Romania may come and say it's not okay, and they reconsider your sale, and of course they are obliging you to pay penalties and other things. So it's better to have the correct evaluation of the asset. The third step would be to have a sale purchase agreement. It's really important to have this sale purchase, especially for you as associate, to be covered in all the situation in which all the others may say you did not did the right step, or you did not evaluate the asset at the correct price. So be attentive and sign this kind of document. Of course, there is the fourth step, which would be recording the transaction. This is from accounting point of view, but a discussion with your accountant may solve this step. And lastly, tax compliance, because selling of asset from the company to you as associate or shareholder, of course, has tax implication, and you need to see what are these. Again, going to your accountant, or if you want to check it with us, also okay. You just need to leave a comment, and I will be there to help you. Now let's see what would be the pros and cons of this kind of transaction, because as I said, and everything in life has pros and cons. The main advantage would be simplifying the process, because you are also the seller, you are also the buyer. In this case, you know how all these procedures are done, so you can do it faster. And the second advantage would be the flexibility in price, let's say, because if you are the sole shareholder, you can establish what is the price with what you want to sell, and that would be all. Nobody will check on you, and nobody will say it's not okay, or you made some other tax implication you need to pay. The disadvantages, on the other hand, may be a little bit more. Of course, if there are multiple associates or multiple shareholders, because sometimes if, for example, you are the sole shareholder, maybe a conflict of interest. You are also the owner of the company. You are also the beneficiary of the sale itself. So if the price is too low, it may be a conflict of interest, but this can be easily resolved with an report from an independent evaluator, so everything good on this case. Another disadvantage would be legal issue. For example, if you don't know how to do it, if you don't know how to make it correctly, and the procedures are not followed as it should be, maybe some legal problems. The third disadvantage would be the incorrect evaluation, in which sometimes if in this case, I mean for companies in which you are multiple shareholders, because if the sale is too high, that means that the shareholder must pay too much money. If the sale is lower than the price of the market, then the company would lose some money. Either way, it's something that you should discuss with your associates and establish only with you. And because we talked about multiple shareholders, let's see what if one of it does not agree with what you are doing. What are your legal way to do it? Although most of the time decisions in your company are taken by unanimity, there are some situations in which one of the shareholders does not agree with the transaction. So let's see in this case what you can do in order to avoid or to still can do it even if there is one that does not agree. First step would be to arrange a meeting with all the associates and talk with each of them to see what are their points of view about this. And of course, at the end of the meeting, to have that paper that says what everyone said. Point number 2, review the car's appraisal in order to make sure that the selling price is fair and justified. This means that if you can do an evaluation from an independent evaluator, and in this case, all the associates may see that you are transparent with them, and you will not sell the price that you want to sell the car. It's not something which is not justified. The first step would be to ensure that all the documents are clear and transparent. For this, you should, consult a lawyer to help you with all the papers that you need, with purchase agreement, with invoicing. This is something that an accountant can help you with. And to make sure that everything is done correctly and smoothly, in order not to have problems, and that a shareholder not to say it's not okay, the price is too high, you did not mention the price market and so on. Basically, in order to convince a shareholder that you are doing the right job, the right thing here, you need to have all the documents prepared. The meeting with them, the document that's where says everything what they said, the purchase sale agreement, the invoice, and of course the registration and deregistration from the company's patrimony and registration to your all personal patrimony. And because we talked in the beginning about legal, fiscal, accounting, and administrative implication, now let's take them all and see what are all of them. First category would be the administrative aspects that you need to take into consideration. And for, let's say, point number 1 would be to notify all the shareholders that you want to have a general meeting of all the associates that are in that company in order to let them know what are your intentions. Point number 2, make sure that you have all the documents required. By documents, I mean all the documents that are ensuring the transfer of the ownership from the company to yourself. And by this, I mean registration certificate, the certificate of the car, vehicle's ID, the buyer's ID, and so on. And the third point would be the removal from the company's assets, meaning that you need to remove that asset or the car, if we are talking about a car, from the company's asset and to register to your personal asset as your personal asset. Let's see a little bit about the legal aspects. By legal aspects, what I would recommend you is to take into consideration to make a sale purchase agreement between you and the company and to put there all the terms, the object of the sale, the amount of the sale, the conditions of the payment, and so on. Of course, this goes ahead with the registration of the car from local taxes. It's really important to do this as well. Now, we are reaching to the fiscal aspects because there are some fiscal aspects to take into consideration as well, and the most important are like this. For example, if you are a micro enterprise, if you sell the car, you need to see exactly the correct price, because after selling, you will have to pay 1% or 3% depending on the type of tax that you will pay. If you are a company that pays tax on profit, on the other hand, you need to make sure that to see what is the profit when selling this car, because the profit, if you don't have any other expense, may be taxed with 16%. There is a thing here in which you can deduct the expense with the depreciation that is not done yet for the rest of the months of the depreciation that you should have had on this car. It's something which not many accountants know, so make sure that they will deduct that expense as well. Another fiscal implication is the tax on dividend, because the money are coming in the company, so means that for having back to you as shareholder or to divide to all the shareholders, you need to pay tax on dividend, which is 8%. And lastly is the VAT sphere. If, for example, you are a VAT payer, you must put VAT on the invoice. So you should take all these fiscal aspects into consideration as well in order to have a correct sale from the company's account to your personal account. These are some of the main implications that selling a car's company to its owner or associate may be. If you have any other question, if you have other situation with your associates, do not hesitate in contact us. Here in the comments you have the Calendly link if you want to have a consultancy one-to-one. And what I may say, I'm waiting your commentaries here, and I will answer to all of them. Have a good day and see you soon.